Good morning, everyone. Welcome to Unconventional Wisdom, the MMT Investment Show, where our panelists of expert traders and coaches are going to be talking today about the S&P 500. So if you guys have been here in the past, we're doing new topics every week, editorials written on them by our panelists or guests that come through. And basically, we just want to drill into a little bit more about, the functionality of the market, how all these things move, as we've seen this huge uptrend in traders coming on, and just more traders in general. Millions of brokerage accounts have been made in the last few months, and it just has been a continuous cycle since the beginning of the pandemic. Essentially, so many more brokerage accounts. We see a lot of changes in the market, a lot of changes in dynamics, a lot of different people trading that, and different ways that we can capitalize on that. So this week I'm joined by Joe. He's kind of our head honcho, commander in arms over here.
Yeah, I just want to say a couple things about how the week is going, because Randy's going to be covering a super topic. As of this morning, we had a normal micro moment session in the morning, and we were up today 6.5 to 2.5%, which was really kind of a slow day for us. That was 3 trades, 2 apples. Well, actually, we're more than that, because these 2 of these trades, not mentioned here, came in after I got here this morning. So they would be reported more. What was the total on those 2? Tim, do you remember?
What was the total of, I'm sorry?
Those 2 that you sent me later on.
Oh, the combined was 6 cents.
Nice. Well, I mean, how percent-wise you have it?
About 6. I can tell you exactly. Okay. First one was 2.6, and the second one was 3.167.
Okay, that puts about 12 or 13% we're up today. Now, for the week through today, we're up. If we add that, we're up about 77%. Monday through today, because we're through trading those for today.
Wow.
Yesterday was a huge day. We were up 25% just for the day. And then last week we were up 105% Monday through Friday of last week. And that's our micro moment trading. And Randy probably has something to report on his more traditional, longer term micro moment and traditional covered call trading here in a moment. But we're doing good. Everything's real good. And you can participate in those seminars they're a day for about an hour every morning, Monday through Friday. You can go to the website, which like I'll direct you to later, and you can sign right up off that website. So, Randy, you want to give a little update on what went on today, and then we get into your S&P.
On what went on today?
No, well, I mean in your trading.
Oh, well, this morning I was at the doctor with my wife, so I didn't get to do any like Tim's and Micah's trades this morning. So, but that's one of the nice things. You can trade when you want, and trade when you don't want. But as far as the covered call process, which is a slower term, Micah and Tim, they're in and out in 30 or 40 seconds, where the covered call process is a few days, and did really well again last week. Closed out all the positions. I'm just calling up here. Go up one slide. I had, I think, 7 positions last week. Yep, 7 positions from SPY, CVS, Microsoft, the Qs, Riot, Amazon, and Home Depot, and all of them closed out. The lowest percentage was 4.3% for the week, and the highest was 23.4% for the week. So those were anywhere from like one day on SPY at 11.1%, up to 4 days on like Amazon and Home Depot. But those the process, and I teach it every Wednesday morning. I call it synthetic covered calls. Where a normal covered call is buy the stock and sell a call against it. I teach how to select the long position being an option. So I buy an option that gives me the right to buy the stock at a set price up to a set date, and then I can sell calls against it to generate the income. So what the covered call really is like renting out your real estate, either renting your stock or renting an option, like renting a house, right? You invest in a house, you buy it, and then you rent it out, and you get monthly income from that rent while your investment just sits there in the house. Well, that's the same thing with covered calls. But instead of buying the stock, Amazon's $3,345 today. I only invested $4.53 a share and generated 10.3% return with all of the capital back in 4 days. And so it's a way to leverage your capital without borrowing any money. Don't have to borrow anything. I just use the cash that I have. But by the selection process of making sure that it's a good, solid quality company that's in a rising cycle and getting in at a lower price, and being able to buy an option that gives me the right to buy the stock. So it's a known entity, right? It's not speculation. It's not, what happens if it goes up or down? It could go up, it could go sideways, it could even go down, and I still generate that income and get my capital back at the end of the week. Occasionally, it goes down more than the position was set up for, and then I just manage it. We have techniques where we keep the position going, generate more income for the next week, and continue doing that week after week after week until I close it out to get all my capital back and still lock in those returns. So it's a great way to trade if you don't want to trade moment by moment by moment with Tim and Micah. It's a great way to still generate really, really outstanding returns on a small amount of capital with lower risk. There's always risk when you're in the market, but by having a covered call, it lowers the risk.
Don't you have some special things you do on the specific S&P stocks?
Yep.
Yeah. So tell us about those. Yeah.
Yeah. So one thing is I did SPY last week for 11.1%. Now SPY is the ETF for the S&P 500 index. The S&P 500 index it's at 3858 today. It's actually an all-time high right now. 3858, 3,858. So it's a huge number, but the SPY is about 10% of that. And so you could, if you have less money, you can trade the SPY. But the S&P 500 is a combination of, it says 500, but it was really, I think, 504 different equities in there, because some of the companies have multiple different stocks that gets added in there. But it's a well-diversified position because it's 500 different companies. So if one company has bad news and they go down, it doesn't have a major impact on the index. So it's considered, by most people, it's considered the broad index for judging what the market is doing, the S&P 500, because there's 500 different companies. Now there's criteria that you have to meet in order to get into that S&P 500. Tesla, which has been around for a long time, they finally met the criteria last quarter, and they just got added into the S&P 500. I think near the end of December, around December 21st or something. And so they're now in the S&P 500. So there's lots of funds, there's lots of pensions, there's lots of hedge funds and mutual funds that follow the S&P 500 index. So they have to buy all the stocks that are in the index. So when Tesla got added to the index, all of a sudden they had to buy thousands of shares of Tesla to equal the percent that Tesla is inside the S&P 500. So it really gave a boost to Tesla. And now with the S&P going up, and people are buying the index, then they have to buy the Tesla shares. Now, number one, you can't buy shares in the S&P index. You can't buy shares. You can buy options, but you can't buy any shares. If you actually want to buy shares, you have to buy each of the different companies that are inside the index in order to mimic or follow along with that index. So at the end of every day, if the index goes up, you have to buy more shares or sell shares, whatever that it's doing.
Randy, are there funds out there that would have all the 500 in there? So you're buying that fund, but you don't have to go out there and buy each individual.
Oh yeah. There's lots of funds. I think there's a Vanguard 500 fund. There's there's lots of different companies have put funds together to try to track along with the S&P 500. But the way that we use the S&P 500 to trade is we just buy the options. So you can do it with the micro moment trading, like Micah and Tim do, which I also do usually every day, where I just watch our intraday streaming charts, buy the option, and sell it a few minutes later. You can do that with the options on the S&P 500 index, but you can't actually buy shares of it. If you want to buy shares, then you can do the SPY. The SPY is the ETF, exchange traded fund, that tries to mirror the S&P 500. So the SPY actually owns all of those stocks, and so you can buy shares of the SPY, and it's about 10% of the cost of wherever the S&P 500 index is.
Yeah, that's what I get at. And we've got to mention this on the front end. If you want to ask something or whatever, you can do it here on the platform, and it'll pop up. Your question will pop up. People can see it, and we can answer it and address it back and forth. So if you have any questions whatsoever on any of this stuff, or particularly to Mike and deal with our website, which I always think that on that I never realized on there because he changes things. Pulls things off. He's going to go into that in a minute. But,
Absolutely.
Go ahead.
Joe, quick side note. Quick side note. I can't stop looking at it. You got this pose going, and the way your lighting is set up, you close your blinds. It's very mob boss-esque. You got your hat on and your lamp illuminating the edge of your eyelids.
Are you talking about me or Tim?
You.
Okay.
Get that dark room behind you.
Yeah. Yeah, we're in the process of moving, so things are all packed up everywhere, And
I like it.
He's liking those. He's liking those detective movies, where they got the guy off to the side.
Yeah,
remember last week on our deal how I lost my mic.
Mm-hmm.
Yeah.
In the process of figuring out that there was a cable. And I transferred to the mic on the computer. You see down here where it says mic? I actually hit that and it was rolled down below where I could see it. And that's why I was off. I didn't even notice it was muted.
Oh no.
Yeah, that's what happened there. Yeah.
Good to know. Your mic's okay.
Yeah. There's some other really good benefits of the SPX or the S&P 500 index. One thing is it's basically unlimited liquidity. So there might be somebody like Warren Buffett or Bill Gates that they have enough money that they could actually move the market. But for the everyday trader or the retail traders, as we're all called, you can't put enough money into the S&P 500 to really even move the market. So if you have larger sums that you want to be trading and you're concerned with, but what if I buy something or sell something that's going to really change the price, or I might not be able to get in or out of it? That doesn't exist with the S&P 500. It's just unlimited, almost unlimited number of shares out there that your amount of money, you're going to be able to get in and out. The liquidity is so strong that you're going to be in and out. If you put the right price in the market, you're going to be in and out in seconds. There's not a big issue as far as to say, well, I got to wait for somebody to see if they want to buy what I want to sell. There's not an issue for that.
Yeah, Randy, what can happen with Warren Buffett though, when he goes out to buy a company, like he recently bought a huge Aurora, and they happen to be of S&P 500 stock. We didn't buy the S&P 500. He's going to tighten up the options. So because this may be a 6-month deal or something like that, he'll have millions and millions and millions of options. So that does affect the market price of those options, and that can get really exciting too. And
another major benefit for those that are really interested, there's a special tax treatment for the S&P index. It also applies to like the NASDAQ and the Russell and the Dow indexes. But I guess years and years ago, the big financial guys twisted the arm of Congress or whatever, but they got, it's called Section 1256 of the IRS code that treats trading of those indexes differently. They actually treat them as partial long-term gains and partial short-term gains. So I'm not a tax attorney, I'm not a tax expert. You can talk to your own tax accountant or tax attorney, but if you're trading those indexes, ask your tax person about Section 1256. And then they should know what that is if they know anything about the market. And you actually pay less tax on trading in those indexes than you would if you were trading a regular stock.
Yeah, I wrote that down because tomorrow we do our regular session. You know, Deshaun does nothing but SPYs, and that maybe that's something that his traders ought to have known, that tax treatment, because somebody asked me the other day. I think Tim answered part of it, but that's Section 1256.
1256, yeah. So everybody out there in Radio Land or whatever we call this, check with your tax person and find out what equities are impacted by Section 1256. And so if you're trading those, you're going to pay less tax on your gains than if you were trading just any other stock.
We'll probably have that answer tomorrow because there's so many people in those micro-moment trading sessions in the morning.
They'll all go look at it.
You know, so I'll certainly bring that. So that's fantastic information to find out. Somebody specifically asked that the other day, and it was the new client we have, Sabrina, asked that. You know.
Question here from James. What do you do when the stock price goes down? I believe he was talking to you, Randy. I think it came when you were chatting.
Oh, with the covered call process. Well, first off, with the covered call, I'm always selling in the money options. So that what that would mean is, say I was a stock was at $50. If I was doing our regular covered call process, I would buy the stock at 50 and sell the 45 call for $6, right? So if I got called out, which means I'm selling the right to somebody to buy my stock at 45. I bought it at 50. I'm going to sell it at 45, but they're paying me $6 right up front. So if I add 45 and 6, if I get called out, I have $51 back. If I don't get called out, if the stock stays or goes below, then I just keep the $6. So it's like returning part of my capital. So that allows, by being in the money, that option is in the money, that allows the stock to be able to go down and I still get called out. So that's the first thing. So the stock can go down and it's okay. If it goes down more than below that 45 strike, then I just sell another call for the next week against that stock. I still have the stock. Now, one of the benefits of doing it with options instead of buying the stock is if I buy a stock at 50 and it goes to 40, I have $10 less of value. If instead I buy the 40 call and it goes down to 40, I still have some value left in the call and I can roll it out and roll it down to continue managing the position. So we have the management techniques that says, okay, but I can keep generating income on that option that I own, just like I could generate income on the stock. But I have less cash in the market. I have less risk in the market because instead of paying $50 for the stock, I might be paying $5 for the option. So I have a whole lot less of capital in the market in case we happen to have some major correction. It doesn't impact my portfolio as much. Therefore, I can have less of my portfolio actually invested and I can keep more in cash. So that has no risk in the market if it's in cash.
And to clarify the techniques, if anyone's brand new here watching, when Randy's speaking about the covered calls, there is an ownership of, well, covered calls specifically, there's an ownership of stock and options. So when he talks about numbers going up and down, he's referring to those two things. It's not just the option independently. When Tim, me, or Deshaun speak, we just buy the option, the call or the put in its direction. We buy it, and then we wait, not very long, mind you, and then we sell it. So if there's any confusion with what he means by things fluctuating, there's a pre-existing stock ownership a lot of the time, which he operates the covered calls off of, unless it's synthetic. Any other details you want to clarify on that, Randy?
Oh, that's good to know. Yeah, the covered call is a different kind of a position and different kind of trading than what Mike and Tim do with the micro moment in the moment trading, and they're watching a different set of charts, and those are the proprietary charts called intraday streaming charts that Joe's had developed, and without those they couldn't do what they do.
Yeah.
But I use a different set of charts called the daily charts and then the yearly charts in order to do covered call parts, because my positions go longer than 30 seconds. Their positions you got to be watching in and out in less than a minute. So it's also different for people. Some people, they can't make a decision in 30 seconds. So they just can't. It just doesn't fit their trading style and their mentality, and so they can't really do the micro moment in and out in 30 seconds. But the cover call, you can look at it over 10 or 15 or 20 minutes. You can do analysis because the position is for 3 or 4 days. You don't have to make a decision in 2 seconds. And so if you're a person that takes a little bit longer to make a decision, then a cover call can still be a good way to go.
I have a question for Joe, actually. Joe, you talk a lot about, going to the Merrill Lynch and buying option contracts on paper and all these things. Over the years, what are some of the main changes you've seen in the S&P 500? Has the S&P, other than the addition and subtraction of a couple stocks like Tesla here and there, has it really changed, or has it stayed pretty consistent?
The number doesn't change greatly because it's so hard for companies to get on the S&P 500. That's why it's usually the S&P 500, the S&P 550 or something like that. But the whole thing of trading has changed astronomically. We couldn't do what we do today. Compound stock earnings was what, 15, 16 years old, right? Something like that. And back then, when we formed that company, that's when we started getting stuff on the internet. Started getting quotes of stocks, started getting quotes of options. So that changed how you deal with the S&P 500 stocks. Because all of a sudden now you can do all our techniques on the S&P 500 or on the Dow 30 or on any stock, virtually any stock in the world. You can do our techniques on. So they they've changed dramatically, and yields on all these techniques have gone up dramatically because Randy and I used to project things and a regular buy the stock, sell the call. We figured 3% a month, 3% a month, and would say, $10,000 in 10 years turned into $1 million. Now you get 3% 2 or 3 times a week. So it's changed everything, no matter which concept, S&P 500, whatever, to dramatically huge returns. I'm going to talk about this at the Calport this weekend and then this broadcast next Thursday. The whole thing's really, really changed.
Awesome. Yeah, if anyone doesn't know, the Cow Report is a free report that we send out every week. Every Friday afternoon. Yep, and it's been published for about
21 years,
21 years, yeah. So that's something that we are continually updating. It's even improving and has plans to improve more, different things we're going to add to it. So you can access that from our website, I believe.
Yeah, this comes out tomorrow afternoon, and this one's going to be on why become a self-directed investor as opposed to dealing with a broker. And this is really going to be a fun one, Micah. It's pretty raunchy. I'm telling you, it's going
to. Oh boy.
Yeah. Yeah. If you're signed up for the Cow Report, which is free, just go to the website, sign up for the Cow Report, you don't already get it. And
I guess a good time to mention that will be our topic next week for the podcast as well. So
yeah, exactly. We do the Cow Report this week, and then we always do the podcast next. Like Randy, last week was the Cow Report, and I do the Cow Report this weekend, and so forth. But yeah, it's going to be. And I'm just going back on a lot of my experience with Merrill Lynch and stuff that we started doing way back then. At one point, the Dow, dogs the Dow. We used to guarantee a return on that 10% a year. Guarantee, Merrill Lynch guaranteed a return. You don't hear that anymore.
Awesome.
Did we get James's question?
Yeah, we did.
Yeah, we did.
Yeah.
Now, there's another thing about the S&P 500 index, which is really, really unique for those that are trading it with options. It actually has 3 expirations every week. So most companies have options that expire once a month. There's a few hundred companies that actually have options that expire every week. Now, the benefit of that is, like our process to generate income, we're really selling what's called time value. So the options trader, a person that's out there speculating, they pay extra for the right to buy a stock above and beyond what the price of the stock is, because they're trying to uh, hold a position to see what happens in the future. So they pay what's called time value. That time value goes to zero at the expiration of that option, because every option has an expiration date that they have to act by that date or it just goes away. So they pay time value. It's the time value that works in our favor. It goes down every day, down and down and down until it goes to zero at the end of the expiration. The more number of times that we can sell that time value in a set period of time, the more income that we can generate. So the S&P 500 is a unique option in that it has 3. It's a Monday expiration, a Wednesday expiration, and a Friday expiration every week. In addition to things like the end of the quarter, the end of the month, those things. Actually, NDX has just started doing that as well. Those are the only 2 that have multiple expirations each week. So, like from a covered call perspective, I can generate income 3 times a week with the S&P 500, where with Tim and Micah's and Deshaun's, they don't really care exactly when the expiration is because they're in and out of the position in a few seconds. But there's benefits to the S&P 500, which also translates down to SPY for the ETF, that I can generate income against positions 3 times every week if if they're in the right place on the chart, and I like the entry point. That, as Joe said, you can use the same money 3 different times in the week, and if I generate, well, I usually generate somewhere around 9 to 10% return on each position. That's just astronomical types of returns. So you can use a little bit of money and still grow your portfolio, even if you're only using a small portion of it when you're generating that type of return.
Mm-hmm. Which leaves you so much safer in the end.
Yeah, let me ask something to James. James' question was, what do you do when the stock price goes down?
Well, we answered that one, James.
No, I know, but I was going to give a little different version of
oh, yeah, go ahead.
Yeah, what you do on that. Typically, James, these trades only last maybe 16 to 30 seconds. We're really in and out fast. For instance, give you a good example. This last Monday, on the 18th, we had 13 trades. We had a 34.8397% return for the day. Now, we had one loss in that, SPY. A huge SPY loss of 8.3333%. And that was Deshaun. He came later.
I was going to at least say hi to him first.
Right. Yeah,
how's it going, Deshaun? Are you having a good day?
we still
it's like huge loss.
I was exonerated of that trade.
That's right. That's right. The press exonerated you on that. He put that in the deal. That's right. Otherwise, you'd be in jail. Anyhow, we had 34% return, and we had an 8% loss. And the reason is when you're in these things, we're not buying the stock, we're buying this and went the wrong way. So we had a much less percent, but we're also having the ability to get out of it real fast. And all the other returns are huge. That the 8% loss didn't make any difference. It still had a huge day. And so that's another way you look at that. And Deshaun also, who brought it up, I think maybe Tim brought it up. Or, yeah, Tim, no, Randy. There's a section called in the tax code section 1, 2, 5, and 6 or something like that. That deals with tax. Remember when Sabrina asked yesterday about the tax situation of SPY? There's a special provision where you can get tremendous breaks on your profits on SPY, and it's in that provision. So I thought tomorrow during that session, we'll ask if we have any accounts there. Somebody might could enlighten us on that. So that'd be good for tomorrow here.
Yeah. For what was that last bit? Your mic was breaking up.
I'm sorry. Oh,
Your mic was breaking up just a little bit. What was that very last bit?
no, I said that section of the tax code that James told us about. No, that
Yeah, Randy.
Randy said. We'll ask about that in the morning if they have in accounts we have on there that can enlighten us more on that. Because SPY is the only thing that Deshaun trades.
Mm-hmm.
And so that fit in real well with the whole conversation what Randy was talking about. He's up there doing the different deals, and Randy's down here. Deshaun, when he shows up, is doing the
Absolutely.
he's doing macro minute.
So, speaking of which, good morning, Deshaun. How are you?
Good morning. I'm perfect. Thank you.
Good. How's your trading morning?
What's that?
How was your trading morning?
It was cool. I ended up taking. I sent you the last trade I did, but yeah, I ended up taking one little small loss. But
Nice.
Yeah, and that's why I want to correct what I said earlier. Where remember you took over Tim's premium spot as being the best trader, and you didn't have a loss, and you were ahead of him. And then he came in with 2 big trades after I left the stage. You came in with a small loss. You're on the bottom, man.
It's a fun little 2-person leaderboard that Joe has going.
He still had a heck of a good day today. So he's good.
Awesome. Tim, and then Deshaun, if you want to weigh in. One thing I was excited to put people onto about this podcast is, you Deshaun, Tim, for instance, used SPY specifically in a way that is not even trading it. You have that chart up. So on our snapshots, if you ever seen our snapshots, somebody's echoing, by the way, kind of. Maybe I'm not sure who. If you see on the snapshots, we have multiple charts up. And that used to be we would have one chart for each trader, but as we got to 3, we kind of just kept those 3 up, these 3 symbols, and they modified a little bit, but for the most part, it was usually along the lines of Apple, Microsoft, and SPY. Triple Q, SPY, and Microsoft for a while. So we have these charts up side by side. Could you talk about kind of the indications of direction that S&P gives you when you're not even trading it, and how to use that properly, not necessarily as as far as pairs trading, but how do you use that to influence your trading on something like Apple, let's say?
Yeah. So as Randy said earlier, without these charts, there's just no way that we could be doing the kind of trading we're doing. And we stick to one ETF or one stock. And in my case, I do Apple, which is actually the largest by percentage holding in the S&P 500. It's interesting that the first 4 or 5 stocks are all tech stocks. But the more I trade and the more I follow these charts, the more I see patterns set up, tradable patterns. In fact, right now, SPY is just doing a killer put move. I actually traded a couple SPYs while we were on our call earlier. It's a tremendous.
Wow.
Yeah, I've been watching that chart, Tim.
Yeah.
I'm gonna bring it up for a moment. It's our proprietary charting, so I'm not gonna show up too long, but I will. I'll screen share it.
Yeah, bring that up.
What they're doing when they hand out these trades, they're handing them out by what the charts tell them to do. So when you subscribe to their stuff, you learn how to use that chart, and they use it exclusively. That's all they do. They don't speculate on anything. That's just what that chart tells them they follow.
Yeah,
you learn the same thing.
Yeah, and this is a great example of what we look for in the chart. For instance, on SPY, we've got there we go. I can look on the right side, see SPY is just really moving vertically down. That's a tremendous pattern. There's 15-20 cents of profit in that move right now.
Mm-hmm.
It's huge. And
This is what our these are the proprietary ICE charts, intraday streaming equity charts. Sorry, continue.
No, that's okay. And this is what we look for. We look for these kind of patterns, and we see these daily over and over again. This one is pretty strong. I don't know if there's something going on out in the world that is affecting SPY right now, but I can see by the other two that they're not really reacting like SPY is. So,
well, SPY hit its 52-week high today. So
okay,
yeah,
it hit an all-time high again today.
Mhm.
okay.
Tim,
Well,
Tim, have you done a couple of transactions since you've been here with us right now?
yeah.
Because I heard your bell. Tim's bell always goes off when SM executes.
You can hear it. He's been doing them.
You watch your eyes and you listen for a bell.
Yeah, I did earlier on, right when we got on the call. SPY was dropping significantly, and I made 2 trades in there for a 9 and an 11-cent gain.
Nice.
And then what's the percent? Because you're only using about $1 something to invest, right?
Right. In fact, I was trading the 383, which is $1.06 now.
So 10 cents is almost a 10% return, right?
Yes. At $1, 10 cents is a 10% return. I mean, that's on a single move, which is just amazing on this. And and I'm sorry, I'm a little distracted because I'm actually in a trade right now.
Oh, yeah. I saw you glancing over. You're good. Deshaun, could you speak to the? Well, you trade the S&P directly, but when you trade or traded in the past other symbols, did you ever look at SPY for some indication as to stock symbols contained in it?
Actually, so I've mainly only traded the SPY, but
Yeah.
I would use like the QQQ and Apple to kind of see. Sometimes I would pay attention early in the day. Q would be making a move to the upside, and then I'd notice SPY would make that move like 5 seconds later. So I would kind of bank off that a little bit every now and then.
Mhm.
But I guess mostly now, I'm just literally just focused on that SPY chart now. I've been training for like over a year now, so I kind of understand its movements. So now I just use that.
Yeah.
Yeah.
And I just closed that trade out for 9 cents.
Nice.
On that. Because these kind of patterns, it's hard to stay away from when they're just dropping straight down for 5 minutes. You can't hardly lose. But this is our charts are the only place that you're going to see this. This kind of graphical information that tells us, exactly when to get in and when to get out. And
I can share it.
Yeah. And Deshaun he's an expert on SPY. He times that sucker perfectly and gets in and, pulls out 5, 8, 15, 20 cents on a trade.
Hey, Tim, on that 9-cent trade, the 9 cents you just made, what did you pay for that?
Went in at $1.42 and out at 151.
Okay, that was 9.142%. Just incredible stuff. Seriously.
And yeah. Tim, you and Deshaun teach people how to do this every morning, right?
Right, exactly, and that's Monday through Friday. This is what we do. We get on. Deshaun trades SPY. I trade Apple. Occasionally Q. I traded a Q this morning, and we show you exactly how to interpret and look for the patterns. On here, literally it would take us 5 minutes to explain the process. It's a little bit like golf. It can take a lifetime to truly master and refine, but you can be profitable from day one. And many of our subscribers are. So
and you do that live in the market. You're actually watching the chart exactly how it's going in the market at that time.
That's right. That's exactly what we're doing. This is live trading. You're literally just looking over our shoulder at our trades. We prep a trade. We typically say, okay, I'm going to prep the 130 strike call on Apple. All right, let's go ahead and enter it. Let's set our sell to close, and boom. So we're doing it live as it happens, so that you can learn to do it live as it happens.
When the session ends an hour after it starts, 8:30 Central, 9:30 Central, market ends, they never have anything that you do overnight or over the weekend. Never, ever, ever.
Yep. Yep. And that's one of the best parts of our trading is we're literally in cash 98% of the time.
Yep.
End of day, we're always in cash. We're done. We do our day's work in an hour each day. And of that hour, we're maybe in a trade. If we made 3 to 5 trades, we've actually been in a trade for maybe 5 minutes of that hour. So risk, this is probably the highest leverage you can do for trading. The returns are tremendous, and the time it takes to do is very short. And you literally do not need to know a thing about the market. We have one guide rail, and that is, when that tick turns, get out.
Yep. Yeah. Randy does pretty much the same thing with his every day also, and he just a little different configuration. But you're talking about Randy does this stuff on the S&P 500, those stocks, and he's kind of adapted his technique. A few little tweaks here and there, lined it up with peculiarities of S&P 500. So a good way to say it.
Mm-hmm. Yeah, and especially Tim, with there's total unpredictable market from day to day. There's no way we know what's going to happen tomorrow because it's driven so much by news.
Right.
Your technique, you're at cash at the end of the day. You don't care what happens overnight. You don't care what happens the next morning. You wait till the market opens, and then you just trade what's going on at that time. It's so fantastic with these. It's just unbelievable how much the market can change from day to day. Yes. You don't even care. You just want it to move while it's going.
You never try to
looking at it.
Or think it's going to go up or it's going to go down. We're totally trading activity. We don't care when the market opens. We don't care if it's up, down, stroke, which way it ever is. We just want to buy it.
Mm-hmm.
One more thing, and then I'll be quiet. Tim, on that one you paid the whatever I said you made 9%. How much did you pay for that stock?
Went in at $42.
Okay, that's $1.42. So we have ultimate leverage here without borrowing money, without using any margin whatsoever, and so it's just incredible. Absolutely incredible.
That is the final distinction. Is people get very confused when we say 3 cents and 11 cents, and but if your entry price is between $1 and $2, then it starts to come into perspective. Thank you from Keith's shop. You guys do amazing teaching and trading. And then Pat asked, you had 3 screens of SPY at the same time, each look different. Yeah, I know I just mentioned that we keep 3 different symbols up. Usually we do. I had it in our other configuration, which is 15, 5, and 1 minute charts. So in other words, everyone's been zoomed really in on a chart, and then they back up, and that chart kind of changes as you back up. You start to get more of a perception, more of the levels. If you're a support and resistance trader, something like that, you want to go back and see what the last all-time high was. So when we bring everything into the current moment, we usually watch the 1 minute chart, which is just the most immediate. But if we're only trading one thing, sometimes we will have multiple time frames up so that we can see the larger picture and then a little bit more specific, and then what's happening right now. Ultimately, when those 3 timelines agree, and there's still a little bit of methodology between the different traders, right? We have a very strict system of how to trade, but each person gets to do it in their own little way still, which is very cool. But we have some clients that prefer to do a 1, 5, and 15 minute, and then wait for those to agree to be extra, 3 times short of their trade at the time. So that's why I had 3 SPY up.
And when you attend those sessions in the morning with our little chat room thing, people tell us what they're making, so you see that people are making these trades. So.
Yeah, that's a very satisfying part of our job for Deshaun and myself, is that we get immediate feedback from clients who are trading with us and making profits as they're learning how to trade. Which is very cool to see. And we do have a very open dialogue with our subscribers. So as we're doing things, as we're explaining things, they can ask questions immediately. We do our best to get to all of them. Deshaun typically hangs out and answers any remaining questions and goes over trades and stuff. So we're very subscriber focused in that respect. We're trading, but our goal is to teach people how to read these charts and how to make profits on their own.
In fact, I just posted on Facebook and LinkedIn, Marcus, if you could show our tags. I just posted a screenshot of, well, 2 screenshots of our question box from one of the days, so they can see exactly what you're talking about right now on there.
Mm-hmm.
So,
yeah, I don't know if y'all noticed that today, evidently Deshaun moved his screens from the ceiling because he doesn't look like he's praying. Or his eyes were total up to the ceiling. It looked like he was asking for divine guidance.
I'm now praying to the Dark Lord now.
John has a question as well here. Hello, would it be possible at some point for one or two of the guys to enter example trades on screen so we can see the actual mechanics of the trade itself? The in and out, is this possible? Possibly. We do that every morning on the coaching. So, a little bit of conflict of interest, but we might be able to do that once. We'll chat about it as a staff.
Mm-hmm.
Well, one thing about that, Micah, is it's the easiest trade that you can possibly make. You're just buying the option, one click, and then you're selling it, one click. It's not a complex setup or anything on the broker platform. It's just buy the option and then sell it. It's like buying a share of stock and selling a share of stock. It's really the process, the mechanics of doing the trade. Very, very, very simple. The real part to learn is interpreting the chart, so the time that you want to get in and get out. That's what they teach every single morning for a whole hour live in the market. You get to view the chart and you hear them talk about, here's what I'm looking at. Now is the time to get in because it's this setup. And that's where the real training comes in to do that process. But the physical, actually buying and selling the option, that's really simple. You can show that in 10 seconds. It's not hard to do.
Yeah, I would say the buying and selling is simple, but I would add that for my opinion, I think the mechanics, that's the hardest part to learn. So that's almost kind of how simple like this thing is. Like the mechanics of buying and selling, how much does I get filled, trying to learn where things go in your platform and everything. That's once you get that, it's pretty much like it.
Yeah, and we've actually recently both taken some time after our active session to show our platform and how we lay it out and how to enter and exit a trade, without giving away our fund accounts, the value of our fund accounts. But like Randy said, really, it's the simplest trading we can do. Now, I know, when you first open a platform like TOS or a TradeStation and you see just, a screen full of numbers, some are turning red, some are turning green. It's like, what? I have no idea where I go here. And that can be real confusing when you first open these platforms. But we do show you some ways that you can minimize a lot of the noise so you can just focus on what you need to see.
And that is the funny part about the process is most of it is not even adding tools and learning this process and learning this. It's like, all right, delete that. You don't need that on your screen. Get that, move that, cancel that confirmation, get that off. It's just clearing everything off.
Yeah, and actually for the major platforms, I actually have some training videos that I made to so you can set your screen up kind of exactly how we have them set up. So it's like you can watch at your own pace type of thing.
Yeah. As Ricky Hill put in, and he just emailed a few days ago, a week or so, that he actually has retired based on our techniques. He's been with us. There's a note right there.
Wow.
Ricky Hill has been with us several years, I think.
Yeah, I love Ricky's story. That's awesome.
And so did Randy. Randy retired.
That's right.
He looked retired because he was kind of old.
and that was 13 years ago. Ricky just retired, I think, in December because he learned how to do the micro-moment trading process. Yeah. And I think he did it for about 4 or 5 months. He got it mastered and said, I don't need to work anymore. Yeah. And so he's generating his income now every day with following Tim and Deshaun and Micah along there.
Yeah, well, I got into this several years ago because my industry decided I was too old to be useful anymore and helped me retire. And that's how I got into this. And we see this story over and over again. Especially these days.
Yeah.
And Ricky also does the covered call process as well. So he covered call process, you can use a little bit more of your money because it's a little more conservative and it lasts a little bit longer. And then you use a little bit of the money to do the in and out multiple times in the day with the micro moment trading. So you can do both. There's a place for both in your portfolio, and so he can generate fantastic returns. And now he's retired. Just I have a quick example for James. James was asking, what do you do when the price of the stock goes down?
Yeah.
On Tuesday, because Monday the market was closed, but on Tuesday I entered a covered call on Netflix. Now Netflix is a $500 plus stock. Netflix right now is trading lower by $11.50. It's trading at $574. So it's gone down $11 today. But the position that I put in, because we use in the money covered calls, I'm going to get all of my money back as long as it stays above $480. It can drop $95 more in the next day, and I still get all my money back with a 35.8% return on the income, because I only have $1.84 per share invested. And if it stays above 480 tomorrow, I get $2.50 per share back, 35% return. And it's probably not going to go down $95, tomorrow, but it still did drop $11 today. And I don't care as long as it stays above 480, and it's at 574. So I have a good cushion, but that's the benefit of doing the in the money covered call is it can go up, fantastic. It can just stay at the same price, excellent. It can even drop, and I still get all of my money back and lock in my return.
Wow. That's incredible.
Good question from, yeah, absolutely. Good question from John here. I've traded stocks on and off for years, not options. Where do you folks recommend going to learn much of the lingo and mechanics so one can intelligently reproduce what you guys are doing? It's funny you should ask that. We just had an intro to options last week, I think. So it was, we had a huge sale on it too. It was like pennies to enter. And so it's really unfortunate. But of course, we start off at the basics in every one of our techniques. So everything we do, if you don't know what a call is and you're starting with options, we'll start you off there. That holds true for the courses as well. We try to bring everybody up to speed at the same rate. As far as just the terminology, I guess, does anyone have a specific resource aside from our training that's a
well, if you want to learn what we do, you come to our seminars and workshops. And on January 30th, which is not this weekend, but the Saturday after this Saturday, I'm going to be teaching a workshop on how to do covered calls with dividend producing stocks. So that's one way that you can come and start. I'm going to start from the basics of what a call is and what a covered call is, and then how to select them and what kind of returns you can get. I'm going to be doing that from the beginning to the end. And so that's a great way to come and learn a little bit about how to do covered calls. And those are with dividend generating stocks, so that you're going to earn the dividend as well as earn the monthly income on the options.
We also have another 2-day, which I've been doing for years, and it's on covered calls and leaps. And Randy participates in a lot, as does Tim. When does that come up, Mike?
February 20th and 21st. That's a full 2-day workshop that really goes in depth into covered calls and options, and is a full 2-day seminar. So you can go to one day on January 30th, or you can do 2 days in February. But we have workshops and seminars every month that if you really want to get involved and learn it, come to one of them.
You can buy you can buy our book, Covered Calls and Leaps. Wealth Options, been out for some time. You can buy it on Amazon, or you can buy it used on Amazon and other folks. and it's a good source.
Mm-hmm.
The most notable one for the moment specifically is on the 23rd. So this is the main announcement I have for the day. In 2 days, we are having our Charting for Momentum course. It's a 2-day course, January 23rd and 24th. If you know nothing about options, you will know pretty much everything there is to know after that. Well, no, that's 2 days is a brief time to pack it all in. But Randy actually is going to be leading it. He starts off with the basics and then is going to be going into learning specifically about it's charting for momentum, right? So it's based on the concept that every stock ever has always moved up and then down and then up and then down and then up. Every stock ever, all time, cyclical, every single one, it's the constant, right? So how do we actually break that down? What is a birth phase, right? Where does that start? Where does it move into? Where does it get tired? And then where does it die? That's what we're going to be going over. Really good information. And then obviously all of your terminology, basics, things like that. And we are running a code right now for 40% off of that. And that code I will get right now for you. It is capital E, capital B, capital C, 4M. EBC 4M. Only one number, which is the 4. So
one other thing, John, that have to learn this stuff. We don't teach you how to speculate like a day trader or something. We're not teaching you. We think this stock's going to go up. We don't do mess with that. We just mess with the pure core technique. It doesn't make any difference anything we do, which way it's going. Now, it really helps. That makes life simple versus going into some most complicated evaluating stocks.
Mm-hmm. Sorry, I was getting the code to Marcus. Yeah. Couple more questions here. Ricky, hi Randy. I worked for Federal Express a long time ago, back in '92. Cool.
My brother actually worked for Federal Express for about 15 years. So.
Oh wow. And then George says Thinkorswim has very. What's that?
What was his question about Federal Express?
So he just was saying that's where you work.
Oh,
yeah.
Oh, that's where you retired from. Okay, I got you.
Yeah. Thinkorswim has some very helpful short videos for basics. Good to know. Thank you.
And on that FedEx, the gentleman that started it and currently, president of it, we had the same attorney with the Rockefellers in Little Rock, Arkansas. We had the same attorney while he was trying to put that together. And to show you a speculator, the only way he got that together, he had to go to Vegas. He's an incredible gambler. And he would have to go to Vegas almost every weekend and win the payroll. And that's how he put that together. And towards it, as he was becoming to get successful, his mom had a little money in town, and so he was dipping into some of that money also, and she found out and she sued him. So now he got two others sued him. He's going to Vegas, winning the payroll for FX. Little Rock wouldn't let him come in there, so he had to go to Memphis. I mean, he just had everything in the world. And I'd see him at least once a week. We'd visit. And finally, it all came together. It took off. He didn't have to go to Vegas anymore, and his mom dropped the suit.
Wow.
And, great things can happen in life.
That's amazing. Yeah.
Awesome. Oh, Deshaun just, I didn't see that in the private chat. Oh, video to explain options. Cool.
Okay.
Awesome. Well, I want to thank everyone for being here. Thanks, Deshaun, for coming in and chatting with us. Tim, really appreciate your firsthand experience on those moment-to-moment trades. It's
my pleasure.
Pretty crazy the rate at which you guys get those things done, and then live on the. Thanks for giving us a little live demonstration as well.
Absolutely.
And Randy, your information on everything is always very in depth, very helpful, and you're a good communicator, so we appreciate it. So, thanks for being here, putting it all together, always.
Thank you, Micah, and y'all come back next Thursday. We're going to be doing. Should you be dealing with the broker or doing it yourself? So.
Next week we will be chatting about self-directed investing. Yes, and I think self-directed investing is self-directed investing is a pretty relevant topic for the five of us here. So I'm looking forward to it.
Indeed.
Okay.
Awesome. Anything else, guys?
Just one last thing real quick. Randy is our only professional baseball player we have. He travels the world playing.
Actually, 2 weeks from now, I'm going back down to Florida to play a tournament. So
Okay.
Wow.
Nice.
Yeah. So hopefully it'll be nice and warm down there. It's like 40 degrees here today. So
Yeah, it is. It's cold and rainy.
Ricky says he'll see you in class this weekend.
yeah, look forward to it, Ricky. Yep, he's already signed up, ready to go. We're gonna learn how to read the advanced chart for entry and exit of position. So
Awesome.
it'll be great.
Yeah, it's gonna be a really good course, and that course is cool because it's versatile. It's not, you're learning how to read the chart. So while it may be pitched to something specific at the time, you can really apply it to every part you read.
Micah, they can order the cow report from the website. The cow report is free, but they can get on the list to get the cow report every Friday.
Yeah. Yep. Where our website is in our bio, we have our cow report that publishes every Friday.
Yeah.
So micromomenttrading.com.
Yeah.
Awesome.
Right.
Yeah, and you can find out about all the seminars and webinars on there as well.
Yeah, we just uploaded our full event list for 2021 at the beginning of January. So we have a not quite the full year. We still have some things that are very speculative because of COVID. We'd like to have obviously in-person events again. We had a lot of those before this all started. Luckily, we're very easily adaptable to online only, but it's really fun to interact with you guys and engage with you and chat and sing karaoke. That's how.
Yeah, and we had those all those events over 10 years, right?
Yep.
Yeah, exactly.
Yeah, absolutely.
Yeah, but Tim forgot to play our theme song today when we started.
Okay, we'll see y'all. See you, everybody. Bye bye.
All right. Have a great day.
Have a great weekend, everybody. Bye.
Thanks, guys.